Hello and welcome to Nirmal, ladies and gentlemen. I'm here on that day. We have with us Kunal, Shah, head of Commodities Research, joining in. Kunal, good afternoon. Overall, if you go to see uh, what's happening with regards to crude right now, that's something which is catching everyone's eyes as well. There is an anticipation of OPEC plus, which could be meeting on the 6th of June, if I'm not mistaken, and there is a consideration that could be on the table with regards to extending the production cuts are concerned. What is the sense that you're picking up?
See, first of all, I explained everyone on Monday that basically so much liquidity has been infused by the central bankers. All riskier asset classes are likely to rally. So everything is rallying together right now. So if you look at the global commodity prices, global equity prices, so even though we have lockdown continuing in so many parts of the world, but the fact is that the size of the money which is infused in the overall financial system, it is basically inflating all asset prices, including commodities. So that is the first basis scenario for why everything is moving up. Second, coming to the fundamentals. So in the month of May, OPEC started the production cut for 3 months. So that is May, June, and July. Now they are saying that this production cut is likely to extend from July to September. So August and September, 2 more months of production cuts we are going to see. And what is the size of production cut? That is 10 million barrels per day. So now with the lockdown is getting relaxed in most parts of the world. So in the month of June, we are expecting recovery of another 4 to 5 lakh barrels of demand. So the surplus of oil in the month of May was 8 million barrels. So if the lockdown is getting lifted the way the policymakers are indicating, then another 4 to 5 lakh barrels will come back in the market. So that surplus will further narrow down from 8 million barrel to 4 million barrels. That is one thing. And another thing is this production cut is likely to get extended. So if it all depends on ifs and buts, whether OPEC plus does it or not, that remains to be seen. But a source familiar with the matter yesterday cracked the story on Bloomberg that the production cut is likely to be, extended. So I think on MCX 2900, 2920 are kind of levels what we can see during the day also. And I would recommend that today for evening session, you may see some buying, but $40 is a psychological hurdle for WTI crude oil. So I'm not expecting on the NYMEX WTI to breach 40 and Brent to breach 45. So all these price rise we are seeing is artificial. It's not something, in line with the fundamentals. And the moment this production, so if OPEC are not agreeing, then I think price will automatically start drifting lower. But right now, massive liquidity, super risk on sentiment. So that is basically driving all assets. So fundamentals are not working right now. It is the liquidity which is working. So we may see some more upside extended in crude oil. Don't immediately short it around $40, $39.50, $40 WTI. I would recommend to go short. Till then, do not take an aggressive call.
Right. So these are levels, and whatever up move, Kunal, that we are seeing right now is just going to be temporary, right? Then.
Yes, so like I said, it is not something, which is indicating a fundamental change in the market. Fundamentals remains definitely weak. It is just the artificial way of pulling up the prices. So prices are moving up and so much money is coming in the financial market, in equity, in commodity, in bonds, everywhere this massive money are coming. So that's why we are not seeing any downside in the prices of oil or other asset class. So all asset classes are inflating together. So right now it's very risky to take a positional sell view, but 40 remains a psychological barrier. So I would take a chance at 40 to go short, not before that.
Right. And with this, what's the sense that you're picking up with regards to gold, Kunal? Because now if you go to see, the anticipation for equity markets was that usually the trend is that sell in May, which we've not seen. We've risen from those March high lows in such a way, and that uptrend has continued right now as well. Now, with the equity markets rallying like this, do you think there is a possibility that this is the time to then short gold and not take any long positions?
Yeah, for trading, I
Right.
would say yes, and I am recommending that you know for all the traders who are present in this room right now, you can short gold, and you can expect gold prices to decline and test levels of 46,200 to 46,100. I'm expecting gold to go down. The simple reason, like you pointed out, it is a contra trade. So from last 27 days, the ETF holding of gold is continuously rising. So earlier, the way people were going long in equity, okay, like markets are going to go up before this COVID-19 crisis. The similar position has started to take place in gold. In Western investors are not thinking anything; they are just buying gold outright center. So my long-term fundamentals definitely bullish, but in near term, if everyone is bullish, how the markets are going to go up? And the fundamentals, central banks demand this year is going to decline from 700 tons to 350 tons. So 350 tons minus over there. Retail demand from India, China, very sluggish because of the lockdown. So I'm not expecting that immediately gold will go up. In fact, before going up, it is going to go down. And I'm giving bold target today. I will not be surprised if gold is coming down and testing levels of 45,000 also. So brace yourself and expect gold to remain under pressure, sell on rallies, and that is the right strategy.
Right. And Kunal, what's the sense that you pick up with regards to where other base metals go? Because now, if you go to see, a lot of industries have started to opening up. A lot of manufacturing hubs have started to open up as well. On I mean, the lockdowns are coming down. The demand is set to increase as well. What's the kind of impact are you seeing in terms of metal prices? If you have to look at the base metal side, and do you think there is a possibility of a long strategy that one should look at?
Yeah, I'll be very specific in metals. If you want to go long, these are the three metals: copper, zinc, and nickel. These are the three metals only you should go long. The fundamentals of that three commodities are better as compared to the other base metals. So copper around 420, good buy. 426 should be the target. Stop loss should be placed below 416.90. As far as nickel is concerned, 955 good levels to go long. 975 should be the target. 946, 945 should be the stop loss. And zinc also, I would recommend around 57, 58. 157, 158 good buy. 160, 162 targets what you can expect. So because China's data are coming in a positive territory, manufacturing PMI from last 2 months above 50. So I think metal should be the biggest beneficiary of this, and metal should remain on the up move.
Right, so metals could remain on the up move, and select metals, as Kunal mentioned, are the ones you could take a long call as well. In fact, if anyone has any other queries as well, Kunal is here, which he will be responding to. Kunal, any view with regards to natural gas?
Yeah, so natural gas doesn't look bullish to me. There is a glut on the global scale which is happening in natural gas. There was an article today I was reading that what happened to crude can happen to natural gas also when it comes to negative pricing. I'm not immediately worrying, but if the inventory keeps rising and starts, reaching to another new highs, then there is a chance that it can crash. But fundamental of natural gas bearish. It's just oil prices are moving up. That's why it is holding on. But I am not expecting any major upside in natural gas. I would recommend to sell natural gas on rallies. 138.40. I'll recommend to short it. It can well come below 130, 125. That kind of level it can test.
Right, so sell on rally coming in with regards to natural gas as well. I think we don't have any queries pouring in, Kunal. So thank you so much for joining us on the show. We will come back to you as well as to what happens with crude. But I think there's someone writing, yes, there is a view that is required with regards to where silver goes, Kunal, first.
Yeah, silver, Anup and Abhishek, fundamentals are definitely bullish going forward. But when the gold prices start going down, silver should not be exception. So I was talking to the chartists before this session only, and I think when if gold prices are going to go down by another 400, 500 rupees, silver can too go down by 500, 600 rupees for evening session. So I'm recommending don't go long because industrial metals are doing well. Everyone will be tempted. But if gold can go down, because in gold I'm fearing that everyone is in West, entire West is long. I have not seen a single sell report in gold. So that basically worries me. It is a situation which is building right now. And on other hand, the equity markets have started to do well globally. And there is going to be another liquidity infusion by European Central Bank tomorrow in the tomorrow's meeting. So all this, makes me believe that in near term, the upside in gold and silver should be capped, and they are going to go down. But silver will not crash because silver's production is going down. 5% drop in production is humongous number. So silver will not. Earlier, if gold was going down by 500 rupees, silver was going down by 1,000 rupees. But now it is not going to happen. Silver will remain relatively strong.
That's the view coming in with regards to silver. Kunal, there's a view needed from Anup Sinha with regards to the dollar rupee pair.
Okay. So here also there is a bit of confusion over here, but I'll try to explain, because the fundamental of USDINR. So if you ask me what is the status of Indian economy, so our fiscal deficit is shooting up. Oil prices are again started to move up, which is in a way good sign, but not good if it grows above 45, 50. That is not good. But what is interesting here is, on one hand, the dollar index is also, started to take a dip. So
correct.
If the dollar index goes down to 96, 95, USD-INR cannot weaken, because what happens generally, so keep a watch on dollar index. That is going to tell you the trend. So fundamental of Indian rupee is definitely bearish. But if dollar index, starts again weakening, then all the emerging market currencies start getting a lot of inflows in them, because it becomes good for the institutional investors to do the carry trade. So they borrow the currency which are at higher interest. They start investing in the currency with the higher interest rate, with the currency which are in low in interest rate. So I'll explain everyone. So if I'm a fund sitting in US, so if dollar index declines from 98 to 96, then what it means for me, that 2% of value of dollar is eroded. So I will start looking for a currency which is going to yield me higher. So if I'm going long in Indian currency at 76, so I go short in USD-INR at 76, and I keep putting money. And if rupee goes down to 75, then I'm making 1.5% on zero interest rate. So my currency is not going to fetch me anything. So that is the problem right now with so I'm not expecting a major weakness also. And 75 seems to be the bottom. So somewhere, 75, 80 or that kind of levels, I will recommend to go short. I may go wrong, but I'm of the view that one should remain short in USD-INR pair, not because India's fundamental are improving, because dollar index is going to decline, and I'm taking a call on that, and that's why I'm expecting rupee to remain relatively stronger.
Right. So that's the strength that we could see only on the back of the weakness that we could see in other currencies. Thank you, Kunal. In fact, thank you for answering these queries as well. I hope they are answered, and you'll have got the required, replies as well. We will come back to you soon. Thank you.
Thank you.